let's start. Welcome again. So let's start with short highlights about Q2, how it went. So we see visible improvement in dedicated solutions business unit. It is mostly reflected in backlog for Q3 and whole year, as well as for 2026. More about this in a moment, but it's growing quite significantly. Dedicated solutions had a pretty good quarter with big growth year-over-year, but still we see a lot of room for further improvement and results in longer period. As we mentioned during Q2, there was reconstruction of government in Serbia, so something what happened also during 2024. This is completed. The government is working, but it caused some delay in projects opening and effectively some things which we hoped to be in Q2, they slipped over to Q3. In payment business unit, we see slowdown in Q2, and it's caused basically by two areas. One is India and performance of this merchant business in India, where we, following our quite strict accounting policy, we have covered receivables with write-offs, and this has negative impact. And second is also in e-commerce, but this enterprise part in Turkey, where one of the major banks we have, one of those four biggest we have, is moving towards in-house payment gateway solution, and this transfer of transactions to their in-house system is happening a bit faster than we assumed, and this has negative impact on Q2 numbers. It was pretty good quarter for POS related services with pretty many equipment deliveries, and also positive for direct to merchant lines, so electronic cash registers and IPD. This year is pretty good for cash conversion, and for those of you who monitor us a bit closer, you can remember that H1 in 24 was not strong for cash generation, but this time it's pretty good. We are satisfied, and this is despite those collection issues in India and Middle East we were describing before. For banking, positive, and the results are a bit higher than we forecasted, than we expected. This is mostly thanks to core solutions and smaller new modules we are currently implementing to various banks in the region. So it's not matter of few big projects, but rather many of them, but of smaller value. And traditionally, some insight about transactions in payment. So in e-commerce, we processed 570 million transactions during Q2 with 6% growth. Despite this transition of one client to in-house solution in Turkey, very good dynamics in our IPD, 63%, and pretty good in processing of physical card transactions on ATMs and POS. So let's move to results. First, Q2, and just to remind you, first two columns are total numbers as we present them in our financial statements, and this includes hyperinflation reporting for Turkish operations. And here we have some change year-over-year, which is related with lower inflation rate and bigger difference between average exchange rate of Turkish lira towards zloty and exchange rate on balance sheet date. And as in previous year, effect on operating profit of hyperinflation accounting was positive. This year is 200K negative. And the result generated in financial activity, this is mostly related with revaluation of goodwill. Last year it was around 1.4 million euro positive, and this year it's only 300K. At the end, it's not bad that the economy is stabilizing and inflation is dropping, but for those adjustments, it has impact, as I mentioned. So let's concentrate on those numbers excluding this non-cash hyperinflation reporting. And here on top line, we have growth of 11% year over year, mostly on our own activities. By activities, I understand services, licenses, maintenance, and so on, but our own, not resale. Around 84% of this increase is caused by own activities. On operating profit, 22% growth year over year, and pretty similar 21 in Polish zloty. Previous quarters, there was always difference between euro and Polish zloty due to strengthening of Polish zloty, but now it stabilized, and already in Q2 24 it was pretty strong. Below operating profit, we have a bit lower dynamics on net profit, and here we have two reasons or two effects. One, financial activity, here it's positive. The result on financial activity is higher by 900K euro year over year, and this is mostly related with revaluation of contingent liabilities and put options for minority stakes. We have higher costs of dividends to non-controlling interest in financial activity, but still the balance is positive. And when talking about taxes, here we have income tax higher by 1.6 million euro year over year, with effective tax rate higher by 6% year over year. And what contributes to this 1.6 million? About around 500,000 is simply related with growth of operating profit and pre-tax profit, so natural change. Another 500,000 euro is effect of low base. By low base, I understand that during 2024 there were recorded adjustment of corporate income tax for 23, and they were positive. I mean, they decreased taxes in 24, so it was kind of one-off. Then we have by around 200K higher taxes related to dividends, mostly withholding taxes. Our dividend as ASEE is higher, was higher this year. It was already paid, and obviously we collected more from our subsidiaries, and some of them which are not in EU generate taxes. It can be withholding taxes or some additional tax which needs to be paid here in Poland on such dividend based on double treaty agreements. So this, and we also included some provision for potential Pillar 2 tax. It's early estimation. It's not sure if it will be this or a bit different amount, but to be conservative, we included 100K provision for potential tax. So these are the reasons for change for this a bit lower dynamics on net profit. When we move to segments, As I already mentioned, dedicated solution is the one which was very strong, and it drives the results in Q2 year over year. 3 million euro higher than in 2024, with pretty flat revenues. But the structure of those revenues is again changed. It's more in own than in resale of third-party solutions. Geography, I will comment in a moment, but most of this growth is in Bosnia and Herzegovina. Banking, pretty good, above our initial assumptions, growing revenues by 1.6 million euros, slightly lower operating profit. To recall you, our cycle is that we increase compensations after annual appraisals from 1st of April, and this is visible here, those changes. Last line, patent, the biggest payment, revenues growing by almost 9 million euro. As you see in all business lines, we have increased. This direct to merchant electronic cash registers and IPD. So the first on the list, growth is mostly in Croatia, but also in other countries like Romania and Western Europe. E-commerce, we have growth despite the situation in Turkey. Growth is from India, Middle East, Serbia, and Croatia, and Turkey it was flat year over year. In more traditional business of ATMs and POSs, ATMs pretty stable. Right, increased year over year. Of course, some changes between geographies. More deliveries this year in Croatia, less in Romania, but it's natural that deliveries do not happen each quarter. For POSs, big growth of revenues in Western Europe due to deliveries of Android POSs, but with lower profitability, lower markups than it used to be in two previous years. On top of this, pretty good POSs for Croatia and Central Europe, so Czech and Slovakia. When talking about EBIT, as you saw on previous slide with total numbers, it's slightly lower than last year, and the structure is a bit different than in previous quarter. Lower share of e-commerce and processing plus ECR and IPD. And this is mostly due to e-commerce where we have drop, and it is directly related with Turkey, what I already touched, plus India, where we booked write-offs for receivables. So let's move to structure by geographies. Very strong Southeastern Europe, 3.6 million euro higher result year over year. As I already mentioned, good and strong big increase in Bosnia and Herzegovina thanks to dedicated solutions. Very nice growth. Croatia, 600,000 euro higher result, mostly thanks to payment, e-commerce I have mentioned, POS I have mentioned, so those lines, and also in dedicated solutions. Pretty nice, with a bit lower results in banking segment. Other geographies in Southeastern Europe, slightly higher, lower, but no major things. Some recovery in Central Europe, mostly thanks to banking and dedicated solutions. In both cases in Romania. Western Europe, Here, lower result despite higher turnover, but as I mentioned, bigger deliveries, but with lower markups. And on top of this, last year we did have some AI-related projects, software projects, and this year we didn't have them. So this Turkey, I already commented, this drop year-over-year is related with payment and e-commerce. So we have obviously increase of costs, which in Turkey is obvious, and it happens every year. But we lost part of revenues. So this, and in India, this negative result is directly related with write-offs for receivables, which we have booked following our policy. The management there, they say this is the culture, it should be recovered, but we want to be prudent and we do it always as our policy says. Good. And results for H1, so accumulated for 2 quarters, very similar picture. So I will not go that deeply into details. As you see on top line, we have very similar increase, 12% year-over-year. On operating profit, it's slightly lower, 15 due to Q1, which was with lower dynamics than Q2. And here we have bigger difference between Polish zloty and euro figures. I mean dynamics year-over-year, and this is due to exchange rate in Q1 when in 2024 in Q1 zloty was not that strong as it is since Q2 2024. On net profit, here only 1% growth year-over-year, but here please remember about this one-off from Q1, the loss which was recognized on sale, on disposal of Moven, the subsidiary of the group. With beginning of Q1 we sold, and accounting effects of writing of entries from equity landed in P&L, and it hit our result by 1.5 million euro. If we exclude this, it looks a bit or significantly better. About other elements in finance activity, they are pretty the same as I commented for Q2. The same with taxes, maybe with one exemption. Comment about prior year adjustments of tax in previous year. So difference year-over-year. On Q2 only it was 500,000. On accumulated data it's 700K. So let's move to business units. Here on accumulated data, all lines shows growth year-over-year. Again, the strongest one is dedicated solution, which generates most of this growth, but also banking after very strong Q2 is positive, 200K year-over-year increase, and payments 500,000 increase year-over-year. For details in payment, again, I will not comment much, but as you see, all lines show growth year-over-year, and including ATMs where we did have deliveries, but this time more in Q1 than Q2. And for geographies, again, a bit similar. Strong southeastern Europe, mostly thanks to Bosnia and Croatia. A bit of slowdown in Serbia, which accumulated is to 500,000 euro. This is mostly related with digital dedicated solutions. So this topic I mentioned during highlights. So some delay in contracting. but we hope for H2 to be better. We like backlog shows that it should be better. Good quarter for good half year for Central Europe, and slowdown in Western Europe. And this is the same comment as I gave to Q2. So the same reasons, only bigger numbers due to two quarters. Middle East on Q2 only it was positive. Here we have negative, but in case of Middle East we also included some write-offs. The same challenge with collections still. So we included write-offs following our policy, but in Q1. And Turkey drop 1 million euro year over year, but it's directly effect of Q2, which we already discussed. So let's move to the cash flow and liquidity. I already mentioned that it's pretty good and we are satisfied. So as you see for Q2 H1 this year, operating cash flow was 24 million euros, significantly better than previous year. With also better conversion of EBITDA to operating cash flow, 67%. So it's pretty okay. Usually in our case, H1 is weaker than H2. This is somehow natural. Especially in enterprise business where we have big projects with big clients who have their budgets and they have bigger push for closing and approving some stages and invoicing in second half of the year than at the beginning. So better operating cash flow. Some of this operating cash flow allocated to investments in fixed assets and intangible assets, so CapEx around 9 million euro. Mostly this one related with projects, so for outsourcing and own networks. Also, some of it allocated to M&As realized during this first half of the year, plus payment of some earnouts for previous acquisitions. When we look at last 12 months accumulated data, accumulated operating cash flow, almost 70 million euro. So it looks okay. Yes, after this week previous year when it was 48 millions, it looks like we are back on track, and operating cash flow is similar to the one in 23. And this one in 23 was let's call it pushed by extraordinary events. When some clients paid us last day of or last days of the year, and we have not settled our liabilities towards vendors. And this is reflected here in those KPIs for cash conversions. Like nominal one in 23 was 100%, adjusted for those ones almost 90. And as you see now, last 12 months shows 90. So it looks okay, and we are pretty satisfied. And this cash flow. This cash flow helped us to reach this current liquidity situation. 68 million euro cash, short term, so increased by almost 5 million euro versus end of the last year. Short-term loans, they increased by 4.5 million euro, but it's not mostly it's not due to taking additional short-term loans, just those loans with planned repayment schedule. They are closer to repayment, and some installments are now presented in short term. No big changes on leases, but it's like regular business. And dividend, here we have a pretty big dividend liability. Previous we paid dividend last days of June, and this year we paid our dividend and also some dividend of our subsidiaries. They were paid in July. For M&A liabilities, those in short term, they increased by 14 million euro, but this is mostly again due to reclassification, because these are put liabilities related with put options of minorities of BSTS, Helios, and Iftenpay, which were at the end of last year presented still in long term, and now they are falling into this 20-month window, so they are in short term. It doesn't mean all of them will be realized because it's only option, but we have to present them here. So net cash minus almost 6 million euro. And then when we move to net operating assets, 30 million on plus. This difference between receivables and liabilities, it increased comparing end of the year, and it's similar as half of the year in 2024. And this, as I already mentioned a bit, it's kind of cycle where we do have more recognitions during first half of the year, with approvals and invoicing coming later, closer to end of the year. With inventory, we managed to reduce the balance and free some capital from this. And this is what we commented after Q1, that we will be working to reduce. We have some orders coming for the delivery, and it is visible. Of course, we will never reduce this to zero, because in payment business, we have to have a stock. So this is about liquidity, and let's move shortly to outlook for 2025. So as always, we present backlog. No big changes in overall, 13% year-over-year increase of backlog for Q3, and very similar for whole year. So it shows there should be continuation of trend. As you remember, our revenues increased 12% year-over-year in H1. Backlog shows it should continue similarly. Some changes in between business lines, stronger backlog in ASEE part, so banking and dedicated solutions, where we have 22 for Q3 and 15 for whole year. And it's even stronger in dedicated solutions, a bit lower in banking, and some slowdown in payment part, 6% for Q3 and 12 for whole year, and this related with this Turkey story I already mentioned. So this is it. And do you have any question? You can write on chat, or maybe raise hand, and you will be given with voice option. Okay, you offer a wide range of different products and services. So what are the most important products, services, core products in different segments? The Constellation Group has now acquired additional shares from Asseco Poland. So far, you've been very researched about this. Are there any remaining obstacles or restrictions, and are any regulatory approvals still required? Okay, let me start with second part. I think this is honestly more question towards Asseco Poland than us. We are not involved in the process. We are not part of the process or this process. Okay, we know this what is from press, that the Constellation needs to get approvals from European Commission and some local regulators. This is in progress, but I have really nothing to share about the status. So please contact Asseco Poland for this. And about the products and services, what we offer. Okay, this a bit longer story for longer discussion, but Let me start with payment. Yes, so in payment we have basically those 4 business lines which I presented on the slide with results. Let me maybe go there. It will be easier to describe. And those results are sorry, notice that those business lines are product based. Yes, so in first line ECR and IPD, we offer directly to merchants, so small restaurants, cafes, retailers, electronic cash registers, and POSs, so terminals for payment, but of course with this service of processing the payment. And this is something on the line which is strategic for us, where we want to grow with this direct to merchant approach. Then we have e-commerce and processing, where there are two main areas. One are payment or free payment gateway, which we offer to enterprises, so banks and big fintechs, where we provide mostly in software as a service mode our payment gateway. So they use our payment gateway solution. Second is payment aggregation mode, where we work under e-money license, where we process transactions directly for merchants. So again, our clients are not big enterprises, but different smaller or bigger clients. And third one is related with processing of transactions done or ATMs or POSs. Again, in SaaS mode, directly for enterprise clients, so mostly banks, but also some independent players like independent ATM networks, for example. Then we have third line ATMs, where we provide ATMs and related services. So we can offer ATMs as simple delivery and maintain mode, but also as an outsource mode, where ATM, software, everything stays on our balance sheet, and we provide to banks a complete solution which includes ATM, software, and services related. So we provide working devices. And the same is with POSs, where we can deliver POSs together, of course, with software, and always software is our own solution, own application. And we can sell it to banks or some other players, and then maintain them, or to provide them in outsource. So they stay on our balance sheet, and for monthly fee we rent them to banks. So this is in few words for payment. Then in banking, we basically offer everything what banks needs to operate. Yes, starting from big core banking modules, those basic ones, through omni-channel to security. So we can offer everything, but we can also offer only selected module which covers some part of processes or functionalities banks need. This growth this year is on, for example, thanks to new module financial gateway, which we offer to various banks in Southeastern Europe region. And the last one, most difficult, is dedicated solutions. There we offer different things. We have still declining, but still we have this part where we deliver third-party solutions, so equipment, infrastructure, some third-party licenses. But this is not our strategic focus. And the second part where we have our own solutions and own software. Here is pretty many different ones, but those which are most important, where we focus and we put attention to, are intelligent traffic solutions. So these are systems to monitor traffic on highways, in tunnels, on in general solutions for traffic controls, regional traffic control centers. Based on the same platform, we also offer smart city solutions to monitor traffic in the cities. So this is one, and second is from those most important is solutions for utilities, mostly energy sector. So this is billing solution, smart metering solutions with many surrounding solutions around. But this platform is pretty flexible, so it can be used also for gas industry or the water providers. So different ones where there is this metering need and calculating billing to many huge numbers of clients. So those are the two most important. A bit less are solutions related to business process management, which are also reported in dedicated solutions. I hope it clarified a bit. If you would like to get more, please contact me directly on one-to-one. I can go a bit more into the details, but it will take pretty more time than we have here. Any other question? If not, then I invite you to direct contact. Whenever you have questions, please feel free to contact us. We'll be happy to organize call or meet if you are in Poland, and we can discuss in more details. So thank you very much for joining, and welcome you to direct contact or join our Q3 conference.